So why is the stock down so sharply after what's been an okay year?
Well, they've had a great year, actually, like you said, 60%. And so, even taking in today, it's still a pretty good year for BlackBerry, up more than 50% since the beginning of the year. But, the reason they've had such a great year is because people started finally treating them like the software company that they've become. I mean, they have gotten rid of phones completely. They no longer have to handle that manufacturing risk. And, of course, the brand is disappearing. And so people aren't worried about that anymore. So investors said, hey, there's a software company. Let's value it like a software company. But when you're a software company, you have to hit your growth targets. You have to meet expectations for quickly growing software revenue, which is what they weren't able to do this quarter, and that's why the stock's down.
Now, Gerrit, I did speak to John Chen, the CEO, several months ago, where we talked a little bit more about how the transition was going. Take a listen to what he had to say.
So we are repivoting more towards the licensing our software, our IP, our know-how to other people who like build phones. And then we're going to get, it will depend on relying on a royalty streams. I think it's the right strategy going forward.
So you're still making one last in-house phone?
Yeah, we have one keyboard phone, I promise people.
What's up with that phone, Gerrit?
That's a good question. I mean, we didn't get any numbers specifically from them, and it is designed in-house, but again, it's not manufactured by them. That's all done by TCL Corp, major Chinese manufacturer of phones. So, really, even if that phone, does really, really well, and everyone says, finally, the keyboard Android phone that we've all been waiting for, it's not going to make a big difference for BlackBerry's bottom line.
Cory, we always knew this would be a difficult transition for BlackBerry. Yeah. John Chen said as much as well. What's your take on whether they can pull it off?
Well, I mean, they're pulling it off, sort of. I mean, you have to ignore the profits this quarter. There was a one-time gain of nearly $1 billion thanks to a settlement with Qualcomm. They sued Qualcomm and actually won $980 million some dollars, as I recall. But that all went into earnings this quarter. There's no affiliated cost to that except for legal fees, which were not substantial. So the result is that this quarter looked a lot better than it really was. But if you look at the software growth on a year-over-year basis, sort of percentage gains, you can see that the growth in itself has been kind of really bumpy. But when you look sequentially, and it's not the perfect way to do it because there's a bigger sales in the fourth quarter, but on a sequential basis, you can see that decline down to 1% quarter-over-quarter gain in software sales, and that's concerning for this business. That do they want to be in software with higher margins? Sure, but they need the business to grow. They've spent billions of dollars in acquisitions. They plan to do even more, but they need to have growth, not just a survivable business there. And the concern among investors is that is this all we're going to get from this business as the hardware revenue goes away?